Hello and welcome, everyone. My name is Carrie Rich. I'm the co-founder and CEO of the Global Good Fund, and I'm absolutely thrilled that you are making the time to be here today. We have people participating from across the United States and in several countries around the world to talk about entrepreneurship and financial inclusion. My job in welcoming you is to go over what you can expect today, which is an amazing conversation with really impressive, inspirational entrepreneurs and our amazing moderator. And we'll end with ways to engage by asking you to participate in the Global Good Fund community and by leaving some time in between for questions. So I encourage you, as you're listening, to put your questions in the Q&A box, and we'll make plenty of time to address your questions. For those of you who are not familiar with the Global Good Fund, let me share with you a little bit about the organization. We were co-founded 10 years ago, and the focus of the Global Good Fund is to invest in high potential young leaders using their businesses for good. And we focus on the individual leadership of the social entrepreneur, because when we invest in the individual, that has a ripple effect and positively helps grow the business and create social impact. The Global Good Fund offers a fellowship program, which is our flagship program. It's a 12-month program, and we received about 4,000 applications this year for our flagship program. We also run our LEAP leadership development program, and we do alumni engagement programming as well. This year, we're celebrating our 10-year anniversary, which I'm really excited about. And in celebration, we've launched this 5-part series. And it's in honor of our founding board member, Hooks Johnston, who's been an incredible part of our story. The name of this webinar series is called Spark, Change, Ignite, Impact. And as you can see from today's conversation, we're starting with financial inclusion, and then we'll move on to our other focus areas. So now I'm going to transition our program and introduce our speakers through our amazing moderator, Jake Sandler. Jake, over to you.
Thanks, Carrie. Hi, everybody. Really excited for the conversation today and excited to ask these wonderful speakers some good questions. So I'd love to have everybody start, and Pam, I'll start with you. Can you just tell us a little bit about yourself, tell us a little bit about your business, and a quick sentence on why you decided to focus your business on what you're focused on today.
Yeah, thank you. Hi, everyone. Excited that you're all here. My name is Pamela Capalad. I am the founder and CEO of Brunch and Budget, and also co-founder of Sea Change. And Sea Change is actually the reason why I applied for Global Good Fund. Sea Change is a financial coaching and advocacy program for people of color, where we focus on healing their relationship with money, helping them navigate a punitive financial system, and building generational wealth. And I do this for a lot of reasons, but the main reason is I've been in the financial services industry since 2008, literally the year that everything went down last time. And what I've learned is that financial inclusion means more of us being brave enough to say, this space, our space, prioritizes people of color, because the financial industry has left so much of us behind.
Thank you, Pam. Sid, you're next.
Good day, everyone. Nice to meet you all. My name is Sid Pailla. I'm the founder and CEO of Sunny Day Fund. At Sunny Day Fund, we work with employers to provide a new kind of financial benefit to help their employees save up for those critical $500, $1,000, $2,000 emergency savings on hand, so that when things happen, when the worst happens, they have cash they can count on when they need it. There's a lot of automation and behavioral economics in the background that's at play. What really got me into solving this problem is my own story as an immigrant to the US, being denied crucial financial services, as well as having fallen victim to essentially some of the rules at play, walking out 20 cents on the dollar with a critical benefit that we received because we didn't fundamentally understand what it meant for us when emergencies happen. So for me, the role of financial inclusion is really creating a system that others can, where others can also achieve financial stability and freedom.
And Julio, tell us a little bit about yourself.
course. Thank you, Jake. And hi, everyone over there. My name is Julio. I'm the CEO and one of the co-founders at MiBolsillo. It means my pocket in Spanish. And basically what we do is we create an alternative credit score for the unbanked and underbanked in Latin America. And that helps them access the financial services that they're looking for with alternative data that financial institutions are currently not seeing. And not only that, we create a personalized financial journey to guarantee that they're going to keep an optimum level of financial health. And just think of us as the Credit Karma for the unbanked and underbanked in Latin America. And what got me here? Well, I'm originally from Peru, and nowadays we operate in 4 countries in Latin America. But living in Peru, you see on a daily basis that 70 to 80% of the population is informal and non-digital. So that means that there is no data, no traceable data for financial institutions to provide the financial services that they need. So living that on a daily basis, having cousins, family members, friends that cannot access financial services really got me into trying to help a little bit to solve this issue. And I think we're doing that. And of course, with the help of the Global Good Fund as well.
Thanks all. And for everybody, I'm Jake Sandler. I'm managing director of the Temerity Impact Fund, which is a socially focused impact venture fund at Temerity Capital Partners. I spent my career in tech, building social good startups, and now I get to apply sort of my lessons learned and work with great founders like Pam and Sid and Julio. So I think I want to start with what has been most front of mind for people in the financial system the past few weeks, which is Silicon Valley Bank. And so I'm curious, Sid, Pam, and Julio, given your particular perspective as financial inclusion and impact founders, and given your different focus on the sectors and different geographies, what has the fallout been, if any, for you firsthand? And then what are you witnessing your peers go through during the sort of Silicon Valley Bank crisis? And Sid, I'll start with you.
Sure thing, Jake. So I think that every single person will have some sort of an impact from the Silicon Valley Bank signature, Silvergate, and even the Credit Suisse acquisition that happened over the weekend. Fundamentally, there's 3 things that happened for us as well as others that we're seeing. First and foremost, we are not we're hyper-focused on solving the problem that's in front of us, which is making sure that people have money that they can count on when things go wrong, right? So we're basically doing digital banking via the employer as a channel. So that's the problem that we're solving. When you think of our own banking, our own business banking is really back office. We take it for granted, for lack of a better term. We take the ecosystem for granted. All of a sudden, overnight, we've realized that, yes, thankfully, Sunny Day Fund itself was diversified in terms of how that was happening, but we needed to not take that for granted anymore. So, not only is it a big distraction away from us solving the core problem, it's something that's being added to a plate that was already overwhelmed and full. Second, banking is really a system that's driven by trust, and that trust dissipated overnight. Especially in the world that we're in, we had to work extremely hard to win the trust of folks that may be earning $15, $18 an hour to save up into their sunny day funds. And that's, for folks, that's a really meaningful relationship. Now we're having to work even harder to reassure people that at the end of the day, this is FDIC insured, that this is something that we intentionally designed in a way that it's accessible, and everything that, again, was an initial part of the reason that we did it. We're having to go back and make sure that people understand that their money is actually in a good place. So the aspect of winning back trust and proactively communicating, that's something that's now falling back onto us as we seek to engage people that are either unbanked or underbanked. Third, in terms of the operations of the company itself, of course, we need to fuel our growth. It was already a very tough environment in the VC world over the course of the last 3-4 months. Folks that were very interested in solving these different problems for a variety of different reasons ended up just taking their time. And now overnight, they're trying to figure out what their strategy is if they're a VC investor. So for us, we're grateful to be in a position where we have a decent runway, but at the end of the day, that all of a sudden is now shifting the way that we grow our business to being a lot more driven by larger clients that are pulling forward revenue for us because they believe in our mission, rather than being fueled by investors.
Thanks, Sid. And Pam, I want to build on something Sid said about trust. And I know the work you do every day with a lot of your clients and the financial coaching is focused on sort of the non-tangible elements of the financial system and money and how to build that sort of into people's credit journey. Are you seeing in your work anything related to Silicon Valley Bank and as it relates to people's trust or distrust of the system?
Yeah, so I have a story. Back in 2008, I went on a job interview, and the first thing they said was like, "Oh my God, did you see what happened with Bear Stearns?" And I was like, "What's Bear Stearns?" I have a literature degree. I was going into the industry for the first time. I had no idea what Bear Stearns was, who Lehman Brothers was. My clients today have never heard of Silicon Valley Bank. And I think the thing that's most frustrating about this is that it impacts them anyway, right? They're seeing their 401k portfolios go down. They're thinking about their bank and wondering, could this be my bank next? They're wondering if they should take money out of their smaller community banks that they thought they could trust because, oh my gosh, are they solvent? And I think that is kind of the like short-term ripple effect that's happening now. And I think what's frustrating about it is that these larger players that are affecting things in a big way, but don't affect my clients day to day, now we have to think about it. Now we have to question if we can trust institutions that we're in. Now we have to wonder if the products that we're using, if the places that we're using are not just trustworthy, but also solvent. I think that a lot of my clients want to bank at credit unions. They want to bank at regional banks. They want to align where they put their money with their values. And it feels like it might be harder to do that.
Great. And Julio, I'm curious, being focused on Latin America, which is, obviously divorced from the US financial system, but again, trust being such a huge part of the financial system and financial inclusion, and Latin America having a different trajectory in terms of the amount of time it's spent developing the infrastructure of the financial system. Have you noticed any impact from the Silicon Valley Bank fallout on your work with your clients, with your customers?
Definitely, yeah. As Pama and Sid they have mentioned this, a great opportunity in the financial literacy aspect, not only SVB, but also the financial context that we're going through, right? High interest rates and make people understand how the building blocks of a financial strategy or long-term strategy keep changing all the time, right? So the advice that we had for our clients 1.5 years ago with a different financial environment is going to be different now with higher interest rates, right? So and building on that trust that there are these insurance deposits that you can trust financial institutions in general, that you can build that trust with them, right? In that long period of time, because especially for the unbanked and underbanked, and talking about Latin America, it is very easy to lose trust in that sense. If we're talking about losing trust in the US and other countries, in Latin America, it's very easy, right? So we hear every day, we don't want to go to the bank because we don't trust them anymore. So that's basically the same thing that we hear over and over. And then on the business perspective, I think as a seed or early stage startup, as some of my peers, VCs adjusting in general, right? So I think that with this, probably there are going to be a little bit more adjustments, and trying to focus as a company on having strong fundamentals is, well, it has always been our work to do so, but now it's going to be more essential as well.
Thank you. And Pam, I want to come back to you because I think this issue of trust feels like something that you spend a lot of time working on. So what would you say to the audience who doesn't work day to day necessarily with people trying to build their credit? Like, what are some tactics and maybe some principles that you use to help build trust and help instill trust in populations that don't have a long history in the financial system to help them sort of grow into their ultimate potential and financial resiliency?
Yeah, it's interesting because we just said the word trust like a bajillion times, right? And one of the things that we do to help our clients feel like they're not alone is we ask them, like, do you trust your bank? And a lot of them say, actually not. And we say, good, we don't trust them either. And I think that figuring out how to navigate this financial system and really like understanding it's not so much about trust. It's not so much about like I have a warm and fuzzy relationship as do I understand how this bank works? Do I know what FDIC insurance is? Do I have enough armor in a lot of ways, right? To go into these institutions and say, hey, I am a customer here. I'm going to fight for what I want. And I think that a huge part of our work is our clients trust us because we help them learn how to advocate for themselves. They know that we are on their side of the table and that we'll be there every step of the way to say, hey, like this bank is trying to charge you this fee, or did you notice that this bank charged you this fee last month? Or did you know you had a monthly maintenance fee? Or, hey, your credit score might have gone down because that store asked you to open a card to get a discount. There are all of these different ways that our clients are bombarded with things that they don't trust the financial system. And I think it's really important for us when we work with them to acknowledge that it's okay. It's okay. You're not crazy for feeling that way. And also to say, how do we get through this anyway? Right. And I think that especially when it comes to huge things like this and huge, bank failures, there's First Republic I saw also is getting bailed out. There's this ripple effect that's happening right now. And I think that a huge part of it is helping people understand what happened, because I know, in 2008, when I was just starting in the industry, not only did I not understand what was happening, but I felt afraid to even figure out why, because I didn't even know where to start. And I think when you can give folks a baseline of like, this is what you need to know, this is how it's going to affect you today, then you give them a starting point where they're not just overwhelmed.
Thank you for that. Sid, I'm curious to build on that. In your work, I imagine a lot of the people who are opening up Sunny Day Fund accounts, this may be one of the first financial accounts that they open beyond their traditional checking and savings. How has the concept of trust, how have you as a founder and a company been able to build that and persuade people to sort of go on this journey with you? And what might be some counterintuitive insights you've learned from your experience as it relates to working with people who are sort of at the beginning phase of their financial journey?
Thanks for the question, Jake. To build on what Pam was saying, I think the number was something like 89% of people say that they don't have trust in banks, which is a pretty high number. But the flip is the case with their employer. It turns out that a lot of people really trust their employer. That's where their paycheck is coming from. So, when you're talking about how we build trust with employees or in general, folks that are saving with Sunny Day Fund, we are leveraging the trust that they have within their employer, because fundamentally the core part of that relationship between an employer and employee is financial. At the end of the day, like that's what keeps that relationship going. And of course, we can build on that, the bottom part of that, hierarchy, if you will, to add everything else. But now that you trust your employer to be able to pay you and to be able to help you save, what else can you achieve? I think that's where we certainly leverage the employer, but also we're convincing the employer to pay their employees a little bit more money. We're asking them to reward their employees. It's not as blind as, hey, trust me to hold on to some of your money. It's more so, like by having skin in the game, the employer saying to those employees, yes, not only is this good for you, but you're actually going to win out more than if you were to go the journey alone. The last piece is, I think it's incredibly important, especially in the work that we're doing, and I think that the three of us are certainly representative of that, for us to have real empathy, like a lived experience type empathy that's needed. So I know like Julio and I talked about this after a Techstars program. It like having team members that are able to meet employees, or sorry, meet users more broadly where they are, being able to navigate the individual financial situations as if they were their own, and treating people with dignity and respect is such a core part of how we make sure that money can be more inclusive. So I think that that is an interesting challenge that we continue to face as we, we are like 80%, roughly speaking, BIPOC. So it's like those are types of elements that we didn't intentionally build in, but we just found out that like our mission ended up attracting that population. The last thing I'll say is really from the trust side, this is where, and coming back to what you're talking about with Silicon Valley Bank, I think this is where investors, and this is where more broadly ecosystem players that are interested in financial inclusion should be challenged to take another perspective, because this problem that we're talking about right here, we're really talking about, even in the US, we're talking about something that impacts like 3/4 of America at least, right? And even broadly, I was seeing some of the questions come in, like we know that this is a broader problem as well. So if we really want systemic change, we really need to, like financial inclusion is just finance for most of the world, right? So that I think that we really need to challenge the way that we've been approaching how wealth gets created.
Thanks, Sid. Sort of building on that, Julio, it sounds like you and Sid have had some rich conversations around the topic, but I'm curious, how has your lived experience, sort of your background, allowed you to see something that other entrepreneurs have missed and allowed you to build something innovative with MiBolsillo?
Yeah, sure. That's a great question, Jack. I think just based on what Sid said, right? Getting close to the final user, first understanding and leaving the problem by yourself as the three of us, and I believe a lot of people here in this room have had that experience in the past. Leaving that and then going into deep into what is causing, what are the main roots of that, living with the clients. Basically, the idea of MiBolsillo started in Brazil with our team living 1 month in a favela, which is a slum, and understanding actually how financial lives happen, right? What Pam was mentioning, at some point in Brazil, it was very easy to get credit cards, to get credit, but then Brazil has one of the highest interest rates in the world, getting to 400% a year. And people didn't know about this, right? So getting not paying one installment for 1 or 2 months will become your debt to become 10 times higher than the initial one. So understanding what information the final user has, what are the pains of the users, and what are their goals. That's what is important into building something that really matters. And probably the last thing that I would say into this related to goals, we have based all of our methodology and our strategy on goals, right? So all of us have dreams, basically, right? So we have dreams. We want to send our kids to school. We want to have this type of education. We want to travel. We want to ensure a good retirement and so on, you name it. In the end, all these dreams can become financial goals. And the idea is how you tie that as an internal motivation for users to pursue those dreams, right? Based on a strategy that with data, with information, with experience, you can feed so that our users achieve those goals. So that's a little bit on my side, Jake.
Awesome, thank you. So we have 2 minutes left, so we're going to do one last lightning round for everybody. So I'm curious to hear from all three of you. You know, the mission of Global Good Fund is to amplify social entrepreneurs, right? To build and catalyze leaders like yourselves who are doing important and impactful things in the world. Us as the audience, you know, as investors, as partners, as advocates, as supporters, what can we do as an industry and as an ecosystem to support more social entrepreneurs like yourselves to be successful? And Pam, I will start with you.
The first thing that comes to mind for me is change your metrics for success. right? I think that there are a lot of expectations around like this company has to 100x my investment. This company has to do it within X number of years. They have to employ this many people. They have to IPO. They have to get acquired by this date. And I think that when we think about our metrics for success for our clients, it's not did their credit score go up? It's not do they have more savings? It's not, you know, like do they put more money in investments? Those are numbers. Those are things that fluctuate and go up and down and change at a moment in time. Our metrics for success, we like to say, instead of results-based metrics, we have identity-based metrics, right? Did the company employ more people of color? Did the company impact their community in a significant way? Right? You know, did my client for the first time like check their credit score and they were relieved? I've literally like had clients like cry over brunch because they were too afraid to check their credit score. And I feel like that when it comes to financial inclusion and when it comes to figuring out what success looks like, we have this one narrow idea of what that looks like, and it's usually financial, and it's usually bottom line, it's usually who makes the most money. When really I think success can look like a lot of different things. And what are the non-financial ways that we can measure success and impact?
Love that. Sid, how about you?
Yeah, that was really well put. It got in my mind talking about a few different items. You know, one that just came to my mind is, you know, we're a C-stage company, roughly speaking, and whenever we talk with investors and they have questions around valuation, it's so arbitrary in a way, because yes, you can try to apply public multiples or forward multiples or anything else, but honestly, like the way that we approach it is, we want to make sure that like we want to be a minority-owned business. Like that's what our long-term goals are. We want to continue to remain a minority-owned business, and it turns out that also ends up being really beneficial as we, you know, work with procurement of larger public and private entities. I think like so that like that being aware of those types of things, it's surprising to me how many investors that work with B2B companies are not aware of that. Like that is a really tremendously important differentiator. I think the other aspect is, I mean, other than investment, the thing that gets me most excited about the world of financial inclusion and equity is it's so community driven at the end of the day, right? It's so, because it's such a high volume, such a high percentage of people that have lived through these problems. There's so many people that want to solve it. And so you can't just think about resources as just investment. It can likely be, hey, where's a new account coming from? Where's a new team member coming from? I think really thinking about these as like, you know, tiny brick and mortar shops in a favela, in a community that is committed to improving the lives of those that live in that community. I think when you approach it that way, you'll see that it's not just about investment. It's really about, you know, like the people, the revenue, the other elements of what is critical to running a business.
Thanks, Sid. Julio, take us home.
Of course, yeah. So just building on to what Pam and Sid said, there's a big opportunity and bringing the perspective from somebody outside of the U.S. Opportunity to put efforts together, right, to support Sid stage and yeah, mainly where we are situated as well, startups to grow and thrive, just like the Global Good Fund is doing. Basically, we 75% of our investments come from the U.S. So, and we are a startup based in Latin America, operating in Latin America. Most of our team is from there, right? So we always look for risk capital outside of our countries, because there is an opportunity to grow those ecosystems, to enhance the ecosystems, and to build trust as well, as we have mentioned in that. So there's a potential of this work together for local VCs in Latin America or in other countries outside of the US, and US VCs as well, to support startups, and to think about financial inclusion in the broader sense, right? When we started thinking, when we were brought this question about financial inclusion and in the current financial context that we're in, how do we bring entrepreneurs from all over the world as well to take the opportunities that VCs are offering in countries like the US and in the broader ecosystem in general, right? Talking about SVB, I'm part of so many communities that so many entrepreneurs like us that banked with SVB, for example, and that were affected because we need this cash flow on a daily basis, right? However, traditional banking, and again, most of us, we're given funds from American VCs or from other countries, right? But then the banking system is not inclusive in that sense, right? My account, for example, MiBolsillo's account with one of the banks, I will mention names, was closed because we don't operate locally, we operate in Latin America. So how do we think about financial inclusion in a broader sense as well? So if investment is coming from other places, how can we include those entrepreneurs as well to grow their businesses in a global way, right? So yeah, those are my 2 cents, Jake.
Pam, Sid, Julio, thank all three of you so much for your time, for your wisdom today. Honestly, a fascinating conversation, super insightful. Thank you a lot. I'm going to turn it over to Carrie, who's going to facilitate the Q&A.
Great. Thank you so much, Jake. And if one of the hosts could turn my camera back on, that would be amazing. I'm going to start with a technology question since we're nailing it right this moment, which is, I wanted to hear about how technology and innovation as well be leveraged to improve financial inclusion in rural or remote areas. And Julio, maybe you can start us off with that question.
Definitely. Thank you, Carrie, for the question. And something that we realize, and I was talking about how our methodology is based on goals, right? So we realize that around 70% of our users, one of their main goals is to have their own house, right? So the dream of the first house or the first apartment. And so then we started seeing a little bit more than that, and started working with developers and construction companies, and even companies that sell construction materials, and realized that there was this huge gap of access to credit for improvement, for housing improvement, and for building houses from scratch. And even when users had access to this financing, they didn't know how to build in general, right? Again, talking about informality, people tend to build their houses by themselves or with people they trust, but not necessarily in a professional way. So in the last 16 months, we have been working with this type of partners to promote the construction of high quality housing. And we have been using alternative data that financial institutions are not seeing to create algorithms that prepare this alternative credit score to provide this financing for housing improvement and for construction. So mainly, just to put an example, we have been working with a developer that sells the land for people to, as an investment, to start building their own houses. And they have all this information of the installment payment of this land throughout 12 to 16 months. But the financial institution doesn't have this information. So what we have been doing is getting all these data. So for example, Pam got this land and is X square meters, and she got financed for $5,000 at this interest rate. These were the installments. She was late a couple of times. And so we can create all these patterns that can fit an algorithm and then share that with the financial institution with the permission of the user, of course, that is looking for finance, and say, there's this potential. This user is informal. They don't have a formal job, but they have been paying for this land for 16 months, right? Is this a way to create an alternative credit score? And we're proving that that is one of the ways. That is one example of what we have been doing and how technology can play a role into financial inclusion, Carrie.
Thank you, Julio. You know, I had a personal question based on some of the questions we've been getting in on the back end here. Pam, I thought maybe you could take this one. A lot of times, entrepreneurs think that we need to be perfect. We have to have it all lined up, fully understand financial inclusion, understand how to raise capital, be an expert on the topic in order to just get started. And when it comes to financial inclusion, it often feels so intimidating. that it's really hard to get started. What's some guidance you have to the folks listening on getting started?
Hold on. First of all, Julio, what you're doing is badass. I love hearing about institutionalizing informal activity that people are already doing and formalizing it. So cool. And I think that speaks to your question, Carrie, of I think what's so difficult for folks who didn't grow up with this, right? This wasn't in your family. This wasn't something that was just like a part of your life, or you're in a new country and you have to learn, a whole new system, a whole new financial system. It's so hard to know where to start. One of the things that I always say is that my job shouldn't exist. Like the fact that the financial industry is so complicated that you have to hire a professional to learn how to understand the financial industry, that like blows my mind when I think about it. And I think that when it comes to figuring out like what the first step is, give yourself some grace and know that you just have to take one step. And the next day you have to take another step. And the next day you have to take another step. I think the other thing that is tricky about this space in general is that, we like to think that one mistake won't ruin us. And sometimes that's true and sometimes that's not. And a lot of the clients that we work with and a lot of entrepreneurs I've talked to, sometimes one mistake does, and I think we have to acknowledge that too. And can the industry as a whole find ways for entrepreneurs and especially entrepreneurs of color to feel safe to fail forward, right? We celebrate that when we see the end result and we see the success, but when someone is in the moment, do they have the support and the safety net? And I think that a lot of the work that we do is around helping clients like feel safe and know that if you make a mistake, it is reversible. It's something we can figure out together. But when you feel like you're at it alone, then it feels like you can't mess up at all. So I think the other thing too is figure out how to not do it alone, right? Find a community, find people who you can work with, find people who are going through similar things as you and do it together.
Great thoughts, Pam. Thank you. Minju, I see you have a really thoughtful question for Sid. So Sid, the question is, the Sunny Day Fund sounds like an amazing idea. What metrics are you most proud of as it relates to the impact that your company has had on employees enrolled in this program?
Thanks a lot, Minju. I really appreciate it. Oh man, I'm an engineer, so I can do numbers all day. Here's a few that I'm very proud of. We've had gross savings from folks that are earning $15 to $23 an hour, gross savings activity of just over $1,700. So compare that to roughly half of America that would struggle to handle a $250 to $500 emergency, depending on which survey you're looking at. That in itself is a massive impact that we know that we're having. From the employer perspective, we know that we've been able to drive up retention. We've seen higher retention, specifically in participants, by up to 25%. And we've also seen lower payday loans and 401k loans as well. So it's one of those things where we do feel like we're eliminating some deadweight loss. We're leveraging some automation and thoughtful rewards to make it all happen.
Great thoughts, Sid. Thank you. Julio, this question is for you. You mentioned engaging overseas investors, and the question is about how do overseas investors learn more about the context where the funds will be used? How do they learn about the risks and opportunities, which may be better interpreted by those who are on location?
Definitely, yeah. I understand that on the investor side, and thank you so much for the question, is sometimes it feels safer or less risky to invest in your own backyard, right? But there is a huge potential out there. And as I was mentioning before, the startups that are really looking forward to growth and that are on the right track, if you want to see it that way, we have educated ourselves in a way that we are ready for the global environment, for the global ecosystem. So in that sense, we know how to speak to international investors, and we have this standard language that is pretty much used globally. And don't get me wrong, VCs in Peru and in Brazil and in most of in South America, where my experience is from, are evolving and are developing. But I think they could use a lot of work together to to help startups grow and thrive. In this sense, the practical answer here is that there is a lot of work on the ecosystem mapping in those countries. Most of overseas investors, when they look at Latin America, they look at the biggest economies, which makes sense on the investors' potential, but I would encourage everybody to see the smaller economies as well. So we usually think of Brazil and Mexico, right? But then we have Peru, we have Chile, we have Colombia, we have so many other countries in Central America as a group where we also operate as well, are thriving ecosystems. And locally, there are institutions like the FinTech Association of Peru, the FinTech Associations of Guatemala, and so on, that create this mapping of startups that are thriving and growing for each specific year. So I would start there to see what is the potential, what is the field that you are more interested about, and start exploring a little bit more. And of course, you can have my contact later on if you are interested in Latin America to chat more.
Great, thank you, Julio. Pam, we have a lot of entrepreneurs participating in the audience, and these are often overlooked founders who are not visible to traditional VC markets. Do you have some thoughts for them as they personally, as entrepreneurs, begin to explore their own financial literacy and planning?
Yeah. First of all, hi, entrepreneurs. That's exciting. I love that you're here, first of all, just learning about all this and understanding the ecosystem and just seeing other entrepreneurs talk about this. I think that when it comes to really figuring out how to get started, know that the journey is going to be long. There is something that, you know, I depending on the day I wake up and I'm like, oh, I'm so happy to be doing this. And sometimes I'm like, oh my God, why am I doing this? And I think to welcome all of those feelings and all of those thoughts and really understand that, hey, like this is understanding what your purpose is beyond that, you know. I think that Carrie, can you ask the question again? I'm sorry.
Sure. For entrepreneurs, and they're not necessarily financial inclusion focused entrepreneurs. They're trying to get started in their own financial journeys. What should they be thinking about?
Yeah. I just think about, and I lost my train of thought because I'm thinking back to like when I first started, and I remember like a couple months into it being like, shit, I miss my regular job because someone could just tell me what to do. And someone would tell me if I was doing great or if I wasn't doing great, and they'd help me with my task list and all of these kinds of things. And I said it earlier, and I think that it's a huge thing is finding your community, you know. A lot of entrepreneurs that I've talked to, one of the common threads is just, I feel alone in this. And so if you're just starting out and you might be the only friend who's done this, you might be the only one in your family who's tried to be an entrepreneur, what resources can you find? What places can you reach out to really start to build your community and start to build your network? That was the first thing that I did. I don't remember who gave me that advice, but it was the thing that I did early that I didn't see the results of right away, right? It wasn't like, oh, it got me a client because I went to this networking event. Oh, I sat and had coffee with someone. It didn't grow my business immediately. But I feel like that when you start to build your network early and start to talk about your work early and think about like who you want around you, that's a huge part of it. And also find people who can be your cheerleaders, because you are your own boss. No one is saying, hey, you're doing a great job, right? There's no evidence of that as you go day to day. So I think that really getting it together isn't, I'm going to listen to a bunch of podcasts, I'm going to read this book, I'm going to, you know, like learn everything I can, so much as like, who is the community around you who's going to support you?
Thank you, Pam. And Sid, you deal with that question for maybe entrepreneurs who are responsible for their employees. Can you talk a little bit about the thought process from that lens?
Yeah, absolutely. Thanks, Carrie. I think early employees are every bit as important as the founder themselves. And I'm certainly grateful for the team members that are, as we like to say internally at Sunny Day Fund, as mission delusional as I am. I think that having employees that are having team members that believe in the vision of what is that world going to look like if Sunny Day Fund were successful, that is going to be absolutely key. And 80% of the days may be physically exhausting, but at the end of those days, there may be some amazing wins that we need to celebrate, and celebrating those wins along the way is going to be very crucial. And I think that, for what Pam was saying, I think that taking care of like one's own mental health is not just you realizing that you need to do that for yourself as a founder, but doing the same for your employees. So whatever that tiny win may be, maybe it's like a code release that we're doing. Maybe it's a contract that we won. Maybe it's a post that was super well received. Like whatever it may be, like celebrating those wins along the way, the tiniest of things that end up like building up, like that is what's going to really make sure that the team has endurance and resilience to win throughout.
Thanks, Sid. And this is a question for each of you to briefly respond to as we close out the Q&A section. You're all in existence and you're scaling. So can you share with us more about how you see your services scaling to reach more clients? And Julio, let's start with you.
Definitely. Thank you, Carrie, for the question. I think finding these niches, as I was mentioning before, so now we're working with construction and we realize that we're good at it and we are able to manage these loads of data and transforming them into a score that makes sense for the financial system. What we see is how can we find those more niches, right? So we're working with the construction industry, we're working with retailers as well. One of our investors is a retailer as well, and understand that people have needs. When you move to a new house, you need to buy this and that. And so how can we create financial journeys based on what you're going to need to have a good quality of life in that sense for you and your family? So finding these niches is really helping us as a strategy to start scaling based on the user's needs and based on what the market needs as well in terms of giving financing to their own clients.
Really thoughtful, Julio. Thank you. Pam, how do you approach scaling your financial inclusion business?
Yeah, so I feel like that I started backwards in a sense, where I was just like, I'm just trying to get one client at a time, and I never thought about scaling, I think, until I applied for Global Good Fund. And it's the kind of thing where my original plan was like, oh, well, just like any other wealth management firm grows, I'll hire one financial planner to service this number of clients in XYZ. But one of the big things that I've learned and meeting folks in Global Good Fund and the people you connected me to is the thing that I have shied away from is technology, and building a tech platform that really unifies all of the intellectual property that we put together, all of the processes that we have internally, and codifies it in a way where not only can we use it as a way to get clients, but one of the other huge gaps in the financial industry is finding trained CFPs of color, certified financial planners of color, accredited financial counselors of color. And so there's this gap of just like, our clients are people of color and they want to work with financial planners of color. Where are they, right? When the CFP board out of 85,000 certificates, only 8% of them are people of color, it's really hard to find. So on the other side of it, I envision figuring out how to codify and add technology to a training curriculum in a lot of ways to get people of color who are interested in finance trained up. And so I see us addressing the issue from both sides and using technology as the centerpiece of that next.
So exciting. I can't wait to witness how you grow and continue to grow. Sid, let's hear from you.
Agreed on what Pam said about technology being very central to how scaling will end up working out. I think that for us, the other two really important elements are specifically channel partners. So imagine channel partners as, in the US, there's a couple people that you go to go and get your employee benefits, whether that's health insurance or your retirement savings. those folks being familiar with what we're doing at Sunny Day Fund is going to be tremendously helpful to the growth of our organization while keeping our cost of acquisition low, comparatively speaking. And then the second aspect of it is certainly like the clients themselves. I think that the opportunity that we see in terms of scalability is, as Julio hinted at earlier, like nailing down a couple of verticals that feel the personal pain of, hey, we really want to make sure that our employees are financially stable and free, and we're willing to do what it takes to be an early adopter. Those are the types of companies, in healthcare and manufacturing that we're partnering up with to really establish our case studies, so that by the time that the rest of the industry comes around, we are seen as like existing players with proven metrics.
Great. Thank you, Sid, and Pam and Julio, really thoughtful responses to the really thoughtful questions. So we appreciate both sides of the coin there. I wanted to ask one final question of Jake. Jake, you've been an amazing moderator, and today and for the last several years, you've been an incredible thought partner. And so I just wanted to say thank you to Temerity, because a big part of why the Global Good Fund has had such a focus on financial inclusion is because you not only supported us financially, but also in terms of true partnership. So I just wanted to first say thank you. And second, ask, why did you choose to give time and financial resources to the Global Good Fund, and specifically around financial inclusion?
Yeah, and thank you, Carrie. It's been an amazing journey for us to partner with the Global Good Fund. It's been very mutually beneficial beyond just like being able to donate to a wonderful organization doing good in the world. And I think that's partially why we were interested in originally partnering with the Global Good Fund. When we originally met you and you sort of laid out your vision for GGF, we work with entrepreneurs every day. We fund early stage entrepreneurs, but we fund entrepreneurs who already have a developed idea, who are already in market to some extent, who typically have some version of their product. But what about all the entrepreneurs who aren't quite there yet? It's a really tough challenge to figure out how to encourage people from sort of traditional venture backgrounds, the MBAs of the world, the investment banks of the world, right? There's so many amazing, brilliant people with brilliant ideas who don't have the funding, support, or know-how. And like venture capital is a scary world, and it's very insider baseball. And there's terms like LTV and CAC and Series A and Series B, and all this stuff can feel very off-putting for someone who doesn't come from that world. And so what we saw in Global Good Fund was the ability to vet a huge amount. I don't know, you vet like 5,000 people every year, like a huge amount of people who are interested. And then you find 10 to 12, through your rigorous process who you think, are a great fit, and then coach them through, provide a little bit of capital, a little bit of coaching, great mentorship, and then help them sort of mature to the next stage where someone like us, Temerity Capital Partners, can come in and then fund them at the seed or pre-seed stage, which just means like really early on in their company life. And so that was our thesis. And then I think we've been working together for 5 or 6 years, and now we've invested in 3 or 4 fellows in their startups that have graduated from the Global Good Fund. We've like doubled down and helped you build out the financial inclusion vertical. And so that's like actually served as a pipeline into our impact fund. So it's all sort of rooted in this mission-driven alignment, but like in the sort of brass tacks of what we're hoping to do, Global Good Fund is also one of our key partners in helping us discover like the next great financial inclusion entrepreneur.
Thank you, Jake. And we have an amazing video that we'd love to share with this community about our relationship. And as you heard, it's been really meaningful in every direction. It's been a win for the entrepreneurs. It's been a win for the Global Good Fund. It's been a win for the family office. It's doing their own impact investing and philanthropy. So thank you. And I think Sid, Pam, Julio, Jake, thank you for sharing your insights with everyone today and your expertise and your inspiration. I think today's conversation really highlights the power of partnership and what we're able to accomplish when we all collectively invest in doing good through financial inclusion. Thank you, Temerity Capital, for your continued support. And for those of you listening, I invite all of you to join us in creating social impact. We each have a role to play in making the world a better place. And cheers to investing in high potential leaders like our amazing panelists today. In terms of specifically how you can help support the Global Good Fund's work, if you're an expert, we invite you to become a strategic partner and help us build out our 5 areas of focus to better support our entrepreneurs and invest in our programs. And those 5 sectors are financial inclusion, health, education, the environment, and social mobility. This year, we are celebrating our 10-year anniversary. We have a big celebration on May 4th in the Virginia area, Northern Virginia, and you can help us continue our work for the next 10 years. We're going to keep on going. We are looking for more strategic partnerships, like our amazing partnership with Temerity to support the next generation of impact. We're looking for sponsors for our gala, and we invite other like-minded leaders to participate on May 4th. If you're interested in mentoring to personally spend some time developing the next generation of social impact leaders in any of our 5 sectors, financial inclusion, health, education, the environment, and social mobility, we welcome your expertise. And you're for a social entrepreneur, please apply for our fellowship. We have an application period that opens later this spring, and you can learn more by following us on social media to keep track of when the application period opens. These are just a few ways that you can get involved, but more than anything, we really hope that today is the start of a continued conversation about how we can all work together, because we know there's no shortage of challenges in our society. And with thoughtful leadership like what you've been exposed to today, we can each do our part to make a lasting impact and positively change the world. So we hope to see you on May 4th in honor of our 10-year celebration. You can meet our fellows, network, wine and dine and celebrate, and we have an array of silent auction items. And our next conversation is tentatively scheduled for June around this webinar series, Spark, Change, and Ignite Impact, in honor of our board member, Hooks Johnston. And this next topic will be on healthcare. Thank you to everyone for participating today. And again, thank you to our panelists and moderator for being so inspirational. Thank you.